Research. Well, Bitcoin down 5% today, its lowest level in 3 months, as risk assets just continue getting crushed here. Please welcome back to the show to help make sense of it all, Gareth Soloway. He is the founder of InTheMoneyStocks.com and also Verified Investing Crypto. Gareth, always good to be with you. Love seeing you and your charts.
Yes, thank you for having me back, Danielle. Always good to see you as well.
So as you know, Gareth, many things in limbo here. We have a lot of ground to cover. Want to talk various cryptos, want to talk the US dollar, want to talk bonds, want to talk the Fed and all that. So let's start with Bitcoin here. And, is everything just in limbo because we're speaking ahead of the Fed, which is expected to keep tightening? But should this not have already been baked into the equation? Why does Bitcoin keep heading lower here?
Yeah, so a lot of this has to do with the dollar, right? So when you see the dollar continuing to stay at 20+ year highs and it continues to grind up, it just kills all risk assets. And you can actually watch on an intraday basis how every uptick in the dollar, you'll see the opposite occurring in the Bitcoin chart or in the stock charts of the S&P as well. So a lot has to do with the dollar. We have to keep an eye on rates. Remember, as interest rates rise, there are going to be a certain amount of investors that say, hey, listen, I could get kind of a risk-free return of 5% or 4%. Why am I could lose 20 or 30%? So there's this give and take going on in the market as the market tries to gauge what the heck the Federal Reserve is going to do in this coming meeting. Are they going to raise 75? Is it going to be 50? Is it going to be 100? And again, the market is just trying to figure out the levels.
So fantastic. So you have the chart pulled up there. I know for you, holding that 19,000 was pivotal. Where do you think we go from here?
Yeah, so you're right on that. So we have Bitcoin that flushed early today with the stock market. The stock market was down sharply this morning. It reversed because the dollar began to pull back. And amazingly, I mean, gold was down this morning and then gold reversed basically flat on the day as the dollar came in. And you can see Bitcoin rallying up as well. So the key for me is continuing to watch this 19,500 level on a daily closing basis. The reason why that's such an important level to me is if you go all the way back to the 2017 high, that is the high pivot. And that's kind of the level we've been dancing around for a long, long time. So as long as we kind of hover around that level, there's a small chance that Bitcoin can get some sort of bid if the dollar comes in, if the Fed gives some sort of dovish speak on Wednesday that maybe shows a pivot coming for interest rates.
Now that you have the Bitcoin chart up, could we overlay S&P and gold and just compare all three here?
All right, so here, because, gold, we've grown up, for the past 20, 40, 60 years, that gold was a safety play when things got scary in risk assets. But we can clearly see that's not the case here with gold and the S&P both dipping as Bitcoin has also dipped. And again, the charts are very, very similar in terms of their price action. And again, the key here is understanding that it's the dollar that is causing the movement in both gold as well as risk assets like the stock market and cryptocurrency.
So do you think it's a fair assessment, Gareth? Because I know you're a proponent of Bitcoin and gold, you're an equal player there, but gold's been getting so much hate, with everyone saying, oh, where's that inflation hedge? But on the flip side, would you not say, well, compared to other assets, it's still holding its own, it's still a good protector of wealth? I mean, some thoughts here on gold.
Yeah, so I think gold has been doing amazingly well. Number one, if any investor out there was fully in gold, they would be thrilled this year, right? I mean, they would be so happy to only be down 5% or so on the year. And the other thing to remember is the gold chart is only down 5, give or take, a percent. But the dollar has gone up 15% on the year. So if someone told me that the dollar was going to rise 15%,
yeah,
I would say, oh, well, gold probably should be down 15% on the year at least. And the fact is, it's only down 5%, which shows to me it's relatively outperforming what it should be doing. And it tells me to be accumulating, which is why it's not down as much. So I continue to be a huge bull on gold. I think, again, people love to hate on gold, but in reality, it's performed well. well. I mean, take a look at the euro chart, the gold euro chart, or the gold yen chart. It's an awesome. If you were in those assets via those currencies, you'd be loving gold even more this year. But I think, again, the fact that gold is holding up as well as it is with such a strong dollar is a testament that it's getting ready for a big bull run.
Okay, so, that said, Gareth, I know at the start of the year when we had spoken, you had said, look, gold was going to be your pick for the top performing asset of 2022. Are you sticking to that as we're, in the final quarter of the year here?
I do. So I think Bitcoin still has another leg lower to 12 to 13,000. I think the stock market likely by end of year or early 2023 will tag the March 2020, the highs just before the March 2020 COVID collapse. So you're talking about the S&P downside to like 3,400 or so. The key for gold's outperformance is going to be when you hear the Fed pivot. The Fed pivot is going to be key because inflation's not going to be down to 2% or under, and it's going to tell you that the Fed is now more worried about the economy than about inflation.
Quick thoughts on the great merge, because it's already old news here. But you've basically said, you tweeted, look, it was a classic sell the news event. Ether down as we're speaking, also down 5% on the day. Thoughts on Ether?
Yeah, so I think Ethereum, right? So you have to look at it as the rally from the lows in June. It was about 100+%, and a lot of that was expectation of this merge coming. And really, what we see this with so many stocks as well, is that people buy into these stocks on anticipation of great earnings, and then they report great earnings, and then people are like, okay, well, what's my next reason to own this? I'm up X amount of dollars. Let's sell it. Let's take profits. We'll revisit this in the future. And I think that's what's going on with Ethereum. As much as I love the merge, and I think what it will end up doing will be a positive for Ethereum, it still doesn't solve the immediate issue of the risk and the fear of crypto right now with the Fed being so aggressive. So you're going to see it come down here. I have a major technical level on my chart around $1,250. You can see it just kissed that level right down here coming from this pivot. If it gets through there, you could retest sub 1,000. But ultimately, again, you get down sub 1,000, and I think you start accumulating this for the long term very slowly because it could go lower. But again, you have to think about the thesis with the merge in the long term, but then understand that fear rules the day in the near term, and that's what we're dealing with the Fed right now and the strong dollar.